This is the macro show. This is pregame, okay? We're trying to play the game that's in front of us today. You know, leadership matters at Hedgeye. So again, being transparent, accountable, and trustworthy people. This is a game about playing and weighing probability. It's not about picking stocks. It's about picking the right portfolio. What Powell did yesterday is 100% consistent with a couple things. One, with his policy mistakes, i.e. his forecast, dead wrong, okay? He went as far as to say that the odds are higher that we don't have a recession than having a recession, okay? And now that was the worst comment that I've seen since him saying, rather, that inflation is transitory. So there's one, okay? And the other big thing is that because of that first thing, he is going to stay with this second round of mistakes and keep the short end of the curve pinned high. Like, I can't get the low end of the range much below 375. For that matter, today the low end of the range is above that at 380. So you got that, you get an inverted curve, and people are on an ongoing basis understanding that this is indeed what we thought it was going to be, which is a credit event, which comes at the end of an economic cycle and into the first part of the recessionary slowdown. So he's got all that wrong. And now he's going to get pounded. He's not only going to get pounded on his economic forecast, like I wrote in the early look note this morning. This guy couldn't forecast rain in a hurricane. But he's going to get pounded politically. And that second part, I think, is really interesting because what's happening to the bond market, i.e. getting us paid. Yesterday, gold was up, bonds were up. It was my third day in a row of hitting all-time highs in my long-only account. And now I'm only 64 basis points away from my all-time high in my long-short book. Okay? Why? That's not to big-time anybody. It's just to tell you that we're in the right spot. And everybody who is addicted to leverage or zero interest rate policy is coming to realize that they're going to get pounded, okay? That this guy isn't cutting interest rates on the short end, which is going to keep, again, deposit this game of normal human beings like you and I. You're not an idiot. You're not going to put incremental money in BREIT because you can't get it out. Why wouldn't you just accept the interest rate of 4.75% that I'm going to get today at Chase? Or what I have at Fidelity, That's a reasonable thing to do. I think that that's a reasonable thing in the end of it all. By the way, given all these things that policy mistakes and fully loaded, that's the one thing that I agree with Powell on, is that he's keeping an appropriate level relative to inflation of the risk-free rate, okay? That's it. The timing mistakes, the analysis, everything embedded therein, I haven't agreed with that, obviously, the whole way. If he used the Hedgeye Nowcast model, he would have raised rates well ahead of time. He'd now be in a position to cut them maybe even from a higher level, but still keep the base rate at a high level because inflation is, okay? So that's the America you have. There are, 4,500 banks? There are a lot of banks that are going to fail. That can still happen in America. We're not long banks, we're short banks. That's good for me. I'm not long Barry Sternlicht. I'm short Starwood Capital. I'm personally short that, just FYI, STWD, and BREIT, through BX. So again, that's what I think yesterday gave people a realization. Don't forget, it's a third straight down day for the S&P 500 after the month-end markup that was April. Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.